let's keep it simple. First of all, I am a Bitcoin maxi from a digital asset perspective, meaning I think Bitcoin is the only digital asset that actually offers any true value in the digital asset ecosystem. I say that because it's the only truly decentralized protocol. And Ethereum, firstly, doesn't know its supply, claims it is disinflationary, meaning they're burning tokens, but that can be changed at any time at the whim of a proof of stake fiat type of system. I don't want to recreate the fiat system in Ethereum, okay? You may love smart contracts and all that. I don't own Bitcoin because of a smart contract. I own Bitcoin as a hedge against the fiat Ponzi. Now, everybody, therefore, needs to own some Bitcoin. I'm not telling your listeners you have to own 100% Bitcoin. I think that's irresponsible. But the wrong answer is to own 0% of your portfolio in Bitcoin. So owning 0% Bitcoin is actually more risky than having a proper portfolio allocation. The question becomes, what is the proper portfolio allocation for the average listener? And that, in my opinion, is somewhere around 5% of your total net worth. Okay, you have to add in your house there. You got to add in your stocks. You got to subtract out debt. Okay, but at the end of the day, your total net worth, 5% of it should be allocated to Bitcoin. Why is that? Well, because I think Bitcoin is the greatest asymmetric investment opportunity I've ever seen in managing risk for over 30 years. I have a price target on Bitcoin of over $2 million per Bitcoin in today's dollars, Dinny. In today's dollars. I'm not talking about dollars that in 20 years are going to be worth zero because your house is going to be worth 25 times what it's worth today. I'm talking Bitcoin in today's dollars, a $2 million price target. We could run through the math on that, but I will also say, I'm not the only one saying this. Fidelity, one of the 5 largest asset managers in the world, has a price target of $1 million by the year 2030 and $1 billion by the year 2040 in Bitcoin.
Crazy.
Now just think of how astronomically mind-blowing this is. That being said, let's focus on the here and now. I think Bitcoin has easily at least 20 to 50 times upside from here. Okay? So if your portfolio is 5% and that 5% goes up 20-fold, all of a sudden that 5% is turned into something pretty huge. Now, you're probably supposed to risk manage it and pair some of your profits. But that's the beautiful thing about the asymmetry. It's insurance. And if it goes to zero, which it's not going to, but let's play a binary outcome. It's either worth 2 million or it's worth zero. Well, you've lost 5% of your portfolio, but it was valuable insurance against this fiat Ponzi. I'm going to get a little confusing in mathematics right now. But you guys need to learn math, okay? Because Bitcoin is mathematics, and mathematics is the base layer of language. So don't say, oh my God, Foss is talking math. I'm going to close my ears, because that's not what I want you to do. I want you to try and understand what I'm saying here. Using a price of $20,000 on Bitcoin, US dollars, versus my price target of 2 million in today's dollars, means that the market is only saying that I have a 1% chance of being right. Okay, 20,000 divided by 2 million is 1 in 100. 1 in 100 equals 1%. I'm not telling your listeners that I'm 100% certain that Bitcoin's going to $2 million US per Bitcoin in today's dollars, but I will tell you I have a far higher comfort level or probability than 1%. Another way of saying that is I'd say I'm at least 50% confident that it's going to my price target, which is to say Bitcoin should be trading at $1 million today, according to Foss. Now, Foss has 35 years of investing mistakes, okay? All I bring to the table is 35 years of mistakes, but I've survived because I survived by, first of all, changing my thesis as the information changes. And secondly, and most importantly, sticking to my winners. Bitcoin is a winner. I got involved in Bitcoin when it was under $1,000 a Bitcoin. And your listeners are going to say, oh, Foss, now you're trying to pump the bags because it's 20 times that high. And I'm saying, no, guys, Bitcoin is actually a better investment today on a risk-adjusted basis than it was when I got involved in 2016 at under $1,000. And the simple reason is because of the government, the global government response to COVID and all the BS. I'm sorry to, I like to swear, I'm a trader. All the bullshit that the central banks and the money printing fools and clowns have forced upon the world. The reality is we are in a debt spiral that we can never recover from, and it's only a matter of time before the US dollar and all other global currencies continue to debase in value. And most importantly, some of them are going to fail. You're seeing money fail in Lebanon right now. You're seeing money fail in Turkey. There's 160 other global currencies besides the big G7 countries. Don't you think it's those countries that need Bitcoin more than anyone? Nigeria right now. So all I'm saying, guys, 5% is the target number. And incidentally, if the total world got to 5%, that is your $2 million price target in today's dollars.